Good morning. It is March 21st. Cindy Berkland here from cindyberkland.com. And we are talking today about falling madly in love with your money. If you are not madly in love with your money, you better be reaching out. But today we're going to talk about bank leveraged retirement in the form of what we call premium financing. And what I'm going to say about this is probably my favorite go-to product for those that qualify, and I'm going to explain why. Did you know that by the time you're in your 40s, you should have been saving 35% of your income every single month? And how much you save is the biggest determinant on your success. And what I mean by that is 26% is the amount that you save, and 9% should be the vehicle that you use. And I always talk about the fact that I have clients that hound about the interest rate. What's the interest rate I'm getting on my money? And I'm like, look, if you're not consistently putting money into your bank account every single month, it doesn't matter how much interest you make. But here's the thing, on premium financing, we have some of the most fabulous interest rates out there, but also you are leveraging your money. So let's talk about how this works. I'm going to liken this to a mortgage. If you go to buy a house and the house is $1 million, the likelihood of you putting $1 million down on the house is probably pretty slim. If you're smart, you're going to put a percentage down on that house, maybe 10%. So let's say you put $100,000 down on the house, and then you work with a bank and they leverage $900,000 to get you to buy that $1 million house. Well, we do the same thing with premium financing. It's bank leveraged retirement. So in this case, you would, for every dollar you put in to your savings product, the bank is going to put in $3. Well, I don't know about you, but where in the stock market are you going to get $3 to every year one guaranteed? And that's what this premium financing does, is it guarantees $3 to your every $1, and you're leveraging to make up for the amount of money that you haven't saved. Most people save 5 to 10%. That is not going to get us even out of the poverty level in retirement. 20% is to stay about where you're at as far as retirement goes, but 35% is retiring well. And I don't know about you guys, but I don't really want to change my lifestyle and live on less just because I retired. So if you're worried about your retirement, which everybody usually has the same concern, is A, I haven't saved enough, and B, I'm not going to have enough money to get to the end, to get to the finish line in retirement. So again, let's have you reach out to me, cindyberkland.com, and let's talk about your money. If you're not madly in love, you should be. So reach out, get a hold of me, cindyberkland.com.